Is there going to be a banking crisis? The answer is probably. Why is there going to be a banking crisis? But the problem is that US banks and global banks are in trouble, with the economies in trouble, and that is causing a problem. So let's have a look at where is the actual issues. The issues are starting in the US regional banks. The US regional banks are in a pretty poor state. In fact, just recently, Charles Schwab has reported that they're going to be shrinking their banking operation due to costs and due to lack of profitability, and to release some capital. Now, interestingly enough, Charles Schwab has at the moment around about debt to asset ratio of about 125%. What does that mean? It's quite simple. It means it's got more debt than it has in terms of assets. And that is a problem, because Charles Schwab is a leading broker bank in the US, and that is indicative where the US is as regards US regional banks. Remember, this crisis started a long time ago. It's not a recent crisis. It came to a peak or a bubble back in March 2023 with the closure and the bankruptcy of the Silicon Valley Signature Bank, First Republic, Citizens Bank, all of them in significant difficulty, having to be amalgamated or have huge amounts of cash pumped in to save the consumer and obviously save the depositor. But now that's spread to other countries. Why is it spread to other countries? For example, recently you had China. There were over 40 banks. There was a run on over 40 banks where people were demonstrating, queuing outside those banks to get their cash out of those banks, but those banks are bust. In other words, those banks have heavily invested in real estate, heavily invested in assets that have not produced any return and are not secure. So those banks have gone bust, and that will cause a contagion effect across the globe, because China is the number 2 economy, number 2 global power economic-wise, and obviously superpower as regards economics and as regards economic finance and strength. So when China is in trouble, then the rest of the world will also feel the impact of that. But today I want to focus a little bit on Japan. So Japan, it's Japan, the General Pension Investment Fund, the GPIF in Japan, which is a social security scheme, a real social security scheme, not one of these fake ones that does have money, that they are going now, according to the Washington Post, looking to be selling over 800 billion US dollars in assets. Now, assets are made up of 2 parts. There's around about 400 billion in the S&P 500, who will not be in the S&P 500 because it's the most performing index over the last 20, 30, 50 years. So if you invest in the S&P 500, I wouldn't say you're guaranteed, but there's an odds-on chance that you're going to make money as far as investments are concerned. And it's also the biggest number 1 global holder in US Treasury, US bonds, US Treasury notes, varying from 2 years, 5 years, 10 years, 30 years, etc. And they're looking now to sell that 800 billion of US dollar assets, buy Japanese yen, and invest in the local economy and the local stock market, and obviously buy Japanese government bonds. Now, once they sell their $800 billion worth of assets, that is going to cause a cataclysmic trashing of US Treasury. So US Treasury prices will go down and US Treasury yields will shoot up, causing inflation to shoot up as well. Now, that is likely to happen because the Japanese economy has got a 264% debt ratio to GDP individual. So that is also massive, huge debt, bigger than the US and bigger than many, many other countries. And they need to get down. They need to pull back the national debt and pull back their spending and reinvest back into Japan. So that 800 billion US dollar asset portfolio will be sold. Will is that an issue? Because the second biggest holder of US bonds in Japan is the post office, and the post office will probably follow on from government, as most pension funds will. And the pension funds are holding around about $1.5 trillion in assets as far as US assets are concerned. But the next big seller would be the Japanese post office. And if they sell their $400 billion of US treasuries, then that will cause a further fall in US treasuries and yields will go up even further. causing a crisis amongst bonds. And if there's a crisis in the bond market, they can bet your bottom dollar, if it's worth anything, that dollar, you can bet your bottom dollar that the stock market would also completely and utterly be trashed. And that's what's on the horizon. That is the the dark clouds, and that is the macroeconomics looking at the bond market and looking at financial markets. The next biggest holder of US Treasuries, be surprised, is China. China also is in a shrinking, contracting economic state, and looks like they'll also be selling their US Treasuries. Adding that to Japan, you could be talking about $2 to $3 trillion of US Treasuries being sold in the near term. Again, that would push prices all the way down and rocket yields all the way up. And that again would cause an impact on financial markets. So China would sell the US dollar. The US dollar would then weaken even further. So dollars would be sold, local currencies would be bought, and that would effectively cause a de-dollarization of the dollar. Another potentially political, I'm not sure what China's motive is behind that, but China needs to repatriate money back into its local economy. So two massive Southeast Asia economies, China and Japan, both of them global powers, would be selling dollar assets and buying yuan as far as China's concerned, and yen as far as Japan's concerned, and you see the dollar would slide even further. Adding all that in as to where we're at regarding other countries like Deutsche Bank and Bank Paribas Capital Markets, which are also suffering as banking individual banks, then you could have a widespread banking crisis, starting off with Japan, China, and obviously the US regional banks, who are massive holders of bonds, would see their bond values trash, would cause them to go bankrupt, and that would be a major problem. All of this we'll discuss obviously at the webinar, but overall, what you have got bubbling along is a major global banking crisis, which obviously would threaten deposits and cause central banks to have to print hundreds of billions of dollars to save the investors. Because if you go over to the US, what you don't have in the US, you've got an FDIC, the Federal Deposit Insurance Corporation, that is there to protect depositors' monies in banks, but they've got no money. So the fact they've got no money, the US Treasury would then have to go and print a load of money to save the US banks. So this is a major red flag flying. Japan, China, US, and obviously in Europe. It's not a credit default swap. It's not a mortgage-backed security problem like it was in 2008. But the banking crisis of 2024, 2025 will dwarf what happened in 2008. There'll be a significant drop in the value of the bank, significant drop in the value of the US dollar, and a significant drop, most of all, in the value of the US bonds, because US bonds are the central pillar in financial markets. Don't be misled. It's not the stock market. It's not Nvidia. It's not Meta. It's not Amazon. It's the bond market. You have to look at the bond market to see how overall markets are doing. And if the debt market is solid, then that will give a sustainable growth to the stock market. But if the debt market is not solid, then you're going to have a problem regarding stock markets. If you want to join the mentorship program or have a one-to-one, you can stick a comment in the comment box, or you can follow me on Instagram. You can subscribe to this channel. We've got beginners course, options course, we've got crypto sector, we've got scalping, we've got one-to-ones, we've got seminars, webinars, Zoom calls, everything to develop your trading from beginner stage up to advanced. Meir Walensky with Driving Markets. Have a great day.